Hey everyone, welcome back to Corporate Decoder. Today Ispire just filed an 8K detailing a leadership change, and I am spotting a move that signals a big shift. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is restructuring its top management, and it looks like they are clearing the decks for something significant down the road. So what exactly happened here with Ispire Technology Incorporated? Well, on the 16th of July 2026, the company announced a change in its leadership structure. Essentially, Michael Wang, who was a co-chief executive officer, is no longer in that role. Instead, he is taking on a new position as the CEO of Ispire North America, which is a subsidiary of Ispire Technology. This means Tuanfang Liu is now the sole chief executive officer of the main company, Ispire Technology Incorporated. Now, why is this important? When a company consolidates leadership power like this, it often means they are streamlining operations or preparing for a major strategic move. Think about it. Having two co-CEOs can sometimes lead to slower decision making or conflicting visions. By having Tuanfang Liu as the single CEO, the company can move with more agility. This kind of change can be a precursor to looking for new growth opportunities, or perhaps navigating a challenging market. We've seen companies make these kinds of leadership adjustments right before announcing a new product line, a significant acquisition, or even a restructuring to cut costs. Looking at our research context, Ispire Technology Incorporated, or ISPR, operates in the consumer defensive sector, specifically tobacco. It has a market capitalization of around $100 million, with its stock currently trading around $1.75. The company has about 81 employees. We also see some recent headlines. One from the 17th of July. The very next day after this filing confirms Tuanfang Liu is now the sole CEO. More importantly, there were Q3 results reported in May, which showed a loss in revenue that missed estimates. This leadership change might be a direct response to that performance. The company's common stock is traded on the Nasdaq stock market under the symbol Ispire. It is interesting to note that Ispire Technology Incorporated has elected to be treated as an emerging growth company. This means they can use extended transition periods for complying with new or revised accounting standards, which can give them a bit more flexibility in how they report their financials. For investors, this usually means they might not have the same level of immediate transparency as a more mature company. The specific item in this filing, item 5.02, deals with these kinds of executive and director changes. This is where we learn about who is coming, who is going, and any new arrangements for key employees. In this case, it is all about the co-CEO position being dissolved. The filing is signed by Tuanfang Liu himself in his new capacity as Chief Executive Officer. This confirms his sole leadership over the company as of the 17th of July 2026, the date of the signature. So what is the story here? The departure of Michael Wang from the CAO. CEO role is a signal that Ispire Technology Incorporated is aiming for a more unified command structure. This could be a move to cut through red tape and drive the company forward more effectively, especially after a recent quarter that didn't meet expectations. The question now is, what will Tuanfang Liu do with this consolidated power? Will he focus on turning around the current financial performance, or is there a larger strategic vision in play? Given the company's presence in the tobacco sector, it is also possible they are positioning themselves for regulatory shifts or new market entrants. The fact that Mr. Wang is moving to lead a specific subsidiary, Ispire North America, suggests that this segment of the business might be a key focus for future growth or development. It could be that this subsidiary holds a particularly promising product or market segment that requires dedicated, singular leadership. When we look at companies that have undergone similar leadership consolidation after a period of underperformance, the outcome can vary. Some, like Apple under Steve Jobs' return, have seen remarkable turnarounds. Others, unfortunately, have continued to struggle. The market tends to react positively to clear leadership, but the follow-through and strategic execution are what truly matter. For Ispire Technology Incorporated, the next few filings will be crucial to watch. We'll need to see if this organizational change translates into improved financial results and a stronger market position. I am looking closely at their upcoming earnings reports to see if this move is the start of a positive trend or just a reshuffling of the deck. The risk I'm watching is whether this consolidation will truly lead to better performance, or if it is a sign of deeper issues the company is trying to mask. My biggest concern is that if the underlying business challenges are not addressed, a leadership change alone won't be enough to prevent further difficulties. What I am actually looking for is evidence of a clear strategic plan that leverages this new leadership structure for tangible growth and profitability. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like, comment, and subscribe, and join our Discord community, all linked below.